Right now, Tom Lee believes there's one asset whose growth could rival Bitcoin's last 10 years. It's an asset that Wall Street veteran Tom Lee has been extremely vocal about. And he's not just talking the talk. In the last few months, he's put his money where his mouth is, buying up over $9 billion worth of it. If his thesis plays out, the long-term upside could be extraordinary, potentially even outpacing the growth we saw with Bitcoin, and this isn't coming from an unknown nobody. When Tom Lee makes a call, Wall Street listens. Back in 2017, when Bitcoin was only around $1,000 per coin, Tom Lee predicted it would grow by 100x over the following decade. And sure enough, just 8 years later, in 2025, Bitcoin has reached levels no one thought possible at the time. The asset he now believes could follow a similar path is Ethereum. Tom Lee has suggested that over the next 10 years, Ethereum might trace the same kind of adoption curve we saw with Bitcoin. Some of his models even map out scenarios where ETH could reach valuations that sound unbelievable today. He's also shared shorter-term price targets ranging from $12,000 to $62,000. These are not guarantees, just possibilities that he's laid out based on his team's research and conviction. In this video, we're going to unpack why Tom Lee is so bullish on Ethereum, why he believes it could outperform Bitcoin, and the key factors he thinks could drive that growth. We'll also look at what's happening on the Ethereum network right now and why it reminds him of the conditions that came before previous major rallies. And before we dive in, just a quick reminder, only a small percentage of people watching are actually subscribed. If you're getting value from these videos, hit that button. It's free, it helps support the channel, and you can always change your mind later. Now, let's start with Tom Lee's bold predictions and why he's betting big on Ethereum. Here's Tom Lee explaining his framework for where Ethereum could be headed by the end of 2025.
So let's think about what that means for price. So I have a grid here. On the left side is Bitcoin price levels, and then going across are various levels of the Ethereum to Bitcoin ratio. Our year-end target, this is from the Fundstrat side, for Bitcoin is $250,000. And if you look at the 8-year average, okay, then you can see the range of prices for Ethereum using this ratio and different levels of Bitcoin. And here's the 2021 high. And as you can see, at a $250,000 Bitcoin, you get to somewhere between $12,000 and $22,000 value per Ethereum token. But that's just a ratio recovery. If you look at the replacement cost of payment rails and the banking system, that gets you to an implied value of Ethereum of around 60,000. And that puts the ratio at roughly 0.2500 Ethereum to Bitcoin ratio. And as you can see, that's how you get to $62,000 per Ethereum token. So plenty of upside.
Tom Lee's Ethereum price analysis starts with his Bitcoin target of $250,000 by year end, a prediction he's maintained consistently throughout 2025. But it's what this means for Ethereum that gets really interesting. According to Lee, if Bitcoin reaches its $250,000 target, Ethereum's historical ratio relationship suggests it could trade anywhere between $12,000 and $22,000 simply from ratio recovery. That represents a potential 167% to 389% gain from current price levels around $4,500. But Lee doesn't stop there. When he factors in Ethereum's role as the backbone for payment rails and the banking system moving on-chain, his analysis points to an even more aggressive target of around 60,000 per Ethereum token. At that level, the Ethereum to Bitcoin ratio would hit approximately 0.25, putting Ethereum's market cap at roughly $1.8 trillion. His technical analyst Mark Newton adds another perspective to this bullish outlook, projecting Ethereum could reach $9,000 by early January with potential for an end of September target around $5,500. These aren't just random numbers, they're based on fundamental shifts happening in how Wall Street views and adopts blockchain infrastructure. But Tom Lee's short-term targets pale in comparison to his long-term vision. Here's where things get absolutely wild.
Ethereum specifically, why is this something you need to hold in your portfolio?
Well, to me, Ethereum's having its Bitcoin 2017 moment again. And to give perspective, in 2017, Bitcoin was under 1,000. But that was the year when Wall Street discovered that the narrative of Bitcoin is digital gold, and Bitcoin has gone to 120,000 now, so 120 times increase.
Lee is drawing a direct parallel between Ethereum today and Bitcoin in 2017. Back then, Bitcoin was trading under $1,000 when Wall Street first discovered the digital gold narrative. Since then, Bitcoin has climbed to over $120,000 in 2025, representing that legendary 120x increase Lee predicted years ago. Now he's making the exact same type of call with Ethereum. If Ethereum follows a similar trajectory from today's price of around $4,500, a 120x move over the next 8 to 10 years would put one Ethereum token at roughly $540,000. That's not a typo. $500,000 per Ethereum token. That is insane. Lee believes we're witnessing Ethereum's Bitcoin 2017 moment, the inflection point where institutional adoption and regulatory clarity combine to create a multi-year supercycle. And just like with Bitcoin, most people think this sounds impossible, but Lee's track record speaks for itself. Now let's dive into the fundamentals of Ethereum right now and what has got Tom Lee and Wall Street so bullish. But before that, if you want to stay ahead of these signals and know exactly when the market's heating up or when it's giving you those rare buying windows, I break it down every day in the Crypto Nutshell, my free 5-minute daily crypto newsletter. It's built to give you quick, actionable insights so you can make smarter decisions without spending hours buried in charts or headlines. You'll get clear signals on when to buy, when to take profits, and the latest news that could move markets, all delivered straight to your inbox. Just click the first link in the description, enter your email, and you're in. Now let's take a look at what is making everyone so bullish on Ethereum right now. While Tom Lee's price predictions grab headlines, the on-chain data is what really validates his thesis. Something remarkable has just happened on Ethereum's network. Ethereum hit an all-time high of 48.22 million monthly transactions in September 2025, with daily transactions reaching 1.8 million. This isn't just impressive, it's historically significant. We've only seen this kind of transaction surge twice before, from 2016 to 2017 and from 2020 to 2021. The first instance coincided with Ethereum's 150,000% price increase and the second with a 4,500% rally. In both cases, surging network usage preceded new all-time highs because when transaction activity spikes, it signals real adoption. More usage means more demand for Ethereum's network, which directly increases demand for Ethereum tokens themselves. And right now, despite this record-breaking network activity, Ethereum is still trading at roughly the same level it was in early 2021, almost 5 years ago. But here's where it gets interesting. This surge in transaction volume topped $320 billion across Ethereum's mainnet in August, marking the third largest month ever. Institutional demand and ETF inflows drove a massive chunk of these transactions, suggesting this isn't just retail speculation, but fundamental institutional adoption. The key difference this time is sustainability. Unlike previous cycles driven primarily by retail FOMO, this activity is being fueled by corporate treasuries, ETFs inflows, and regulatory clarity, creating a much more stable foundation for long-term growth. The real reason Tom Lee is so bullish becomes clear when you analyze Ethereum's positioning across the three fastest growing sectors in crypto. Let's start with decentralized finance, which has been the top performing crypto sector in 2025 with a 45% gain. This surge followed the SEC's decision to ease restrictions on DeFi and clarify that liquid staking tokens wouldn't be treated as securities. The result? DeFi's total value locked has climbed from $80 billion in May 2025 to over $145 billion today, nearly doubling in just a few months. And here's the critical part. Ethereum accounts for over $90 billion of that total, representing more than 60% of all DeFi activity. With regulatory tailwinds now in place, this momentum looks set to continue. If DeFi surpasses its 2021 peak of $150 billion, Ethereum is perfectly positioned to capture the lion's share of that growth. The second major sector is real-world asset tokenization, or RWA. This market has absolutely exploded from just $70 million in 2021 to $15 billion today, a 215-fold increase. According to Standard Chartered, this market could reach $30 trillion by 2034. Ethereum dominates here too, accounting for $7.5 billion of the total $15 billion RWA market, exactly 50% market share. The next closest competitor, ZK Sync Era, holds only about $2.3 billion, making Ethereum more than 3 times as dominant as any other network. The third sector is where Ethereum's dominance becomes almost absurd: stablecoins. The stablecoin market has reached a record $280 billion in 2025, more than doubling since the beginning of 2023. McKinsey projects this will surpass $400 billion by year-end and potentially reach $2 trillion by 2028. The catalyst? The Genius Act passed in July 2025, which provided the first clear federal regulatory framework for stablecoins. By requiring full one-to-one reserves and public disclosures, it gave institutions the confidence to adopt stablecoins as part of their treasury operations. Ethereum currently accounts for about 54% of all stablecoins in circulation. Even with Tron holding a significant portion, Ethereum still maintains the largest share of this exploding market. Here's what this means in practical terms. As stablecoin usage grows toward that projected $2 trillion market cap, more transaction fees flow directly to Ethereum. It's like owning the toll road that everyone has to use. With regulatory clarity now in place and institutional adoption accelerating, Ethereum is uniquely positioned to capture the majority of this growth across all 3 sectors. The institutional adoption story gets even more compelling when you look at what's happening with corporate treasuries. Ethereum treasury companies have seen their combined holdings surge from just 40,000 tokens in April 2025 to over 2.8 million Ethereum today. That's more than 2.3% of Ethereum's total supply accumulated in just 5 months. Leading this charge is Tom Lee's Bitmine Immersion Technologies, which has become the largest corporate Ethereum holder with over 2.1 million ETH worth more than $9.2 billion. In just 35 days, they accumulated over 832,000 Ethereum starting from zero. Absolutely record-breaking pace. To put this into perspective, they are buying Ethereum 12 times faster than Michael Saylor ever bought Bitcoin. But here's what makes this really significant. Renowned investors are participating in this trend too. Stanley Druckenmiller owns a 2.5% stake in Bitmine, while Peter Thiel holds a 9.1% stake, making him the company's largest shareholder. Bill Miller III has also made a major investment, joining Cathie Wood's ARK Invest in backing the company. This isn't speculative money chasing quick gains. These are some of the world's most sophisticated investors making strategic, long-term bets on Ethereum's role in the future financial system. The trend shows no signs of slowing. Corporate purchasers collectively acquired 273,300 Ethereum just last week, with Bitmine alone accounting for nearly 250,000 of those tokens. This institutional buying pressure creates a fundamental supply-demand imbalance that could drive sustained price appreciation. What we're seeing today represents a fundamental shift from previous crypto cycles. Unlike the retail-driven rallies of 2017 and 2021, this cycle is being powered by institutional adoption, regulatory clarity, and real-world utility. Ethereum ETFs have attracted close to $10 billion in inflows since July, with August alone seeing $4 billion in net inflows. The daily numbers are even more striking. From August 21st to 26th, spot Ether ETFs drew nearly $2 billion, while Bitcoin ETFs only managed $171 million. On several trading days, Ethereum funds generated $455 million in new investments compared to Bitcoin's $81 million. This institutional capital isn't just buying and holding, it's actively using Ethereum's network. The surge to 1.8 million daily transactions isn't coming from retail speculation, but from stablecoin settlements, DeFi protocols, and tokenized asset transfers. Meanwhile, 30% of Ethereum supply is now locked in staking, showing that long-term holders are doubling down rather than selling. This creates additional supply pressure as more ETH gets removed from circulation. Tom Lee's ultimate thesis goes far beyond just price predictions. He sees Ethereum experiencing what he calls its 1971 moment, similar to when the US abandoned the gold standard. Just as that shift led to massive innovation on Wall Street, Lee believes the tokenization of real-world assets will drive similar innovation on Ethereum. Wall Street will develop stablecoins, tokenize stocks and credit, digitize real estate, and even monetize reputation and intellectual property, and much of this activity is already taking place on Ethereum. The regulatory clarity from the Genius Act combined with institutional adoption and Ethereum's network effects creates what Lee calls a super cycle that could last much longer than traditional crypto cycles. This is why Lee has put his money where his mouth is. He took over as chairman of Bitmine in June and has helped the company accumulate over $9 billion worth of ETH in just a few months. And he's not stopping there. His goal is to reach 5% of Ethereum's total supply. Ethereum can outrun almost anything because its supply dynamics are actually even more bullish than Bitcoin's. Its supply is either staying the same or shrinking while demand keeps rising. That is a classic supply shock. Here's what is going on. In 2022, the network switched from proof of work to proof of stake. New Ethereum issuance fell about 90%. Think of it as the same effect of 3 Bitcoin halvings in one move. And at the same time, a burn mechanism was introduced to Ethereum, which started burning fees. Now, every transaction on Ethereum destroys a little Ethereum. When activity heats up, the burn can exceed new Ethereum issuance, so net supply goes negative during those periods. Now add staking, roughly 1/3 of all Ethereum is staked, and that number is only climbing. It sits behind locked windows, and a lot of it is restaked or used as long-term collateral, that is Ethereum supply off exchanges and out of daily circulation. Combine all of this with Wall Street soaking up the float, treasury buyers and spot ETF accumulate and hold. Pair that with Ethereum being used as DeFi collateral and as stablecoin settlement, and even more Ethereum gets tied up in productive use. Put it simply, liquid Ethereum is what gets issued minus what is burned, minus what is staked, minus what long-term holders and ETFs lock up. The result is a shrinking tradable supply. Ethereum issuance is down, the burn reduces supply, staking locks up supply, institutions are buying faster than ever before in history. The Ethereum tradable supply is getting crushed. That is what a supply squeeze looks like. Now, let's look at who is doing the buying and what this means for your personal crypto strategy. If Tom Lee's analysis is correct, we're still in the early stages of Ethereum's institutional adoption cycle. The key insight is that this isn't about short-term price movements, it's about positioning for a multi-year trend where traditional finance moves on-chain. Ethereum's dominance across DeFi, stablecoins, and tokenized assets makes it the primary beneficiary of this transition. The record transaction activity we're seeing today supports this thesis. Unlike previous cycles where high activity preceded sharp corrections, this surge is being driven by fundamental usage rather than speculation. For investors, this suggests a different approach than trying to time short-term tops and bottoms. Instead, focus on accumulating during normal corrections while the institutional adoption story continues to unfold. Tom Lee's track record with Bitcoin gives his Ethereum predictions extra weight. When he said Bitcoin would 100 times from $1,000, most people thought he was crazy. Now he's making the same type of call with Ethereum. Whether Ethereum reaches $60,000 or $540,000 or somewhere in between, the fundamental drivers, institutional adoption, regulatory clarity, and network dominance appear to be aligning for a sustained bull market. The next 12 to 18 months could define whether Ethereum becomes the foundation of a tokenized financial system or remains just another crypto asset. Based on everything we've covered today, Tom Lee clearly believes it's the former. And if you want to stay ahead of these institutional moves and understand exactly when market conditions are changing, I break it down every day in the Crypto Nutshell, my free 5-minute daily crypto newsletter. It's built to give you quick, actionable insights on everything from corporate treasury moves to on-chain metrics, all delivered straight to your inbox. You'll get clear analysis on when institutions are buying, when to take profits, and the macro trends that could move markets. Just click the first link in the description, enter your email, and you're in. The institutional adoption of Ethereum is just beginning. Whether you believe in Tom Lee's 120x prediction or his more conservative targets, the fundamental trends suggest we're still early in this cycle and the Ethereum opportunity. Anyway, guys, that's all we have for today. Thanks for watching, and I'll see you all in the next video.